And I find that, getting frustrated quickly and then moving and then investing somewhere else just because it's hard, that's not the answer. I think there's a lot of opportunities here. It's just you have to learn and stay the course. It takes time, right? Which is great for me because I've been around here for a while, but it's a competitive advantage to understand the tenant laws and then being able to work around them, right? Competitive advantage to have the relationships to get the buildings I want to get, because now we're down to like a cookie cutter model in terms of what we're buying.
Hey, Mike Beer, how are you today, my friend? Welcome to the show.
Thanks for having me, Russell. I'm actually really excited to be on your show. Looking forward to this conversation.
Well, I hear you. You got a nice looking background back there and you got everything going. You had a nice collared shirt going on. This is, you're taking this professionally. You're a professional, my friend.
Yeah, I got the logo in the back, so I do something like this. Oh, this is Mike Beer from Mike Beer Investments.
Question.
Ready.
I got a lot of questions I want to ask you. And, we've been spending together, through coaching, and you've been a member of the Raising Capital Academy for a while. And I'm blown away by the depth that you have all the time. And you shared something in one of our recent conversations about a little bit about your backstory that I really want to dive into. But simple first question, Beer, B-E-E-R, is that the real last name, or is it short for something?
It is my real last name, and I grew up in Poland, so kids around me, because nobody spoke English at the time, they actually didn't know beer meant beer. They just thought it just four letters put together that are very unusual for that country, right?
Yeah. So I have a feeling there's a story to tell about growing up in Poland and that. And you don't mind, for people that have not are not familiar with you and who you are. And guys, pay attention to Mike. He's it's one of those ones, you've been doing it for like 10 years, and you're just starting to really take it the next step, and you're going to be an overnight success one of these decades, right? But if you don't mind, there is a question there. And the question is, do you mind just taking us through a little bit about your backstory, where you grew up, where you came from, and then what led you up to this wonderful world of real estate investing?
So the story is, I was born in Poland, and at the time when we were kids, the country was communist. So essentially, they wouldn't let anybody really out of the country. So my father used to work on a cargo ship, and then I guess he behaves himself where they went around the world, and he never ran off the ship or anything like that. So then when I was about 8 or so, my parents said, you know what, we want to leave the country to provide opportunities for you and your sister, right? They didn't actually tell me this. This is what they were thinking. And then they kept applying to leave, and then passports and such. And it's not as simple as getting a passport, right? They kept getting denied. And then I remember actually my mom going into the passport office and handing the lady a kilogram or 2 kilograms of coffee from like German coffee or something like that, where these products weren't available at all. So it was very rare to have products that are not made in Poland at the time. So it was a very big deal. And then she just grabbed it and then put it in her bag. And then, you know what? All of a sudden our passports came, right? Because of a simple thing like that.
Well, I would imagine that could have been, I was going, okay, now we're having really a dubious thing of the bag of coffee. or is that code for something, Mike?
No, it was coffee, but these kind of things were so rare. So then next thing we know, we're on vacation. We're going on vacation, driving in our little mini Fiat and with a tiny little trailer. And my sisters and my parents are driving, and they're telling us, "Hey, we're not actually going on vacation. So we're going to Norway, right? And we're not coming back. So don't say anything at the border, by the way." Right?
So you guys were, I guess, is the correct term, you were defecting? Is that the correct term, or you were?
That was it. That was it. The family where we're kind of pretending to go on vacation. So So when I heard this, I was just, I didn't have a huge reaction. I was just so surprised. My sister was crying because she had she was 16, so she had a boyfriend at home, and obviously she's leaving. But yeah, we made our way to Norway. I was living there for a while. Actually learned to speak Norwegian. We were there for about a year and a half, and then we couldn't stay. They didn't let us stay, so they said, "You know what? Where do you want to go?" Right? We applied to Australia and then Canada, and then my parents made the decision to come to Canada just because my dad had a friend from university that was living in Canada. So that's the reason my whole life, that decision determined my whole life.
Just because of that one friend that lived in Canada.
Yes.
Right. Are you still
no
friends?
Lives here.
Are they no longer live here?
No, he moved to the Caribbean.
Oh, well, that's the next place you want to go to, my friend. So when was this? When was this that you left Poland, that you were not heading back?
Yeah, so I was 10 years old. So this was late 80s.
Oh, you're just still a young guy. Yeah.
Well, not that young, but
Yeah. So the late 80s. Okay. So you went to Norway. You stayed there for a while, and then you eventually came to Canada. So okay, when you came to Canada, did you obviously, did you know English? Did your dad have a job lined up? Like what was it like landing in Canada, and where did you land, and what was kind of that process?
We landed in Canada with four cardboard boxes. We didn't even have real luggage, just boxes. And then, it was pretty humbling because we're looking at different apartments, and like I remember going in one apartment, and then we're looking at it, and then we just opened a door, and then just like cockroaches started running all over the place. My mom started yelling, and then we're not staying here. So thankfully we found a much better place, and then stayed there. And it was kind of humbling because my dad was a chief engineer on a cargo ship in Poland, and here he had to start out working in a factory, and he was delivering pizza for Pizza in the evenings.
Yeah, they had to do whatever it took, right?
Right, absolutely. So yeah.
Yeah. So what year was that, and how old were you when you came to Canada? And where did you guys which cockroach infested apartment building city did you land in?
So this was in Mississauga. In 87.
Yeah, and there's no more of those cockroach infested properties in Mississauga now, isn't there?
Not at all. They're all gone.
They're all gone. Yes. And okay,
I don't invest in Mississauga, so
80,
maybe they are.
87. How old were you?
I was 11.
11. Okay, so
no English, zero.
Grade 5, grade 6.
Grade 6. Started grade 6. Yeah.
With not a lick of English.
None.
Oh wow!
Just knew how to say my name is Michael. That's it.
What was it like? And I know that's a long time ago and quite a ways back, but if you do kind of reflect back upon that, what was it like first coming to Canada, that you can, like, what was some of your earliest memories?
You know what? We landed and it was hot. It was so humid, because it's not as humid as in Europe. But you know what? It was, I would say, it wasn't bad, but it's a very different country, right, than what we were used to. So it took us a little bit of time to assimilate, to get used to the society and such. But you know what? The Toronto area is so vast, so diverse. It's just the community is pretty welcoming. So we moved on pretty quick. Yeah.
I would imagine there's a large Polish contingent of people that have immigrated from Poland that reside out in the GTA area, I would imagine.
Yeah, absolutely. Especially in Mississauga. So maybe that was the strategy why we kind of came here.
Okay. So mom and dad, did mom work when she came over, or was she just looking after you and your sister?
You know what? My mom was just doing a more general labor, but then my dad, this is one thing I learned. He moved pretty quickly. So then, you know what? He moved on to like a drafting position. So he reinvented himself, and he was working in the office at what he does best. And then And then, went to high school. And my dad always said, you know what, no matter what you do, you got to go to university. Right.
Yep.
So that discipline, and then I never got allowance or anything like that. I started working when I was 11 years old, delivering newspapers, and then later working at Harvey's. So it was always kind of working throughout.
And then you went to university. What's your degree in?
Oh, it's in, I went to University of Waterloo, and it's math and computer science. So that was, when you look at universities that party and have people have a great time, this is exactly opposite of that.
Yeah, you actually went and did school. Yeah, I majored in 5 years of drinking, right?
We did a little bit of partying too, but it was a tough program.
Yeah.
Oh man.
And now you've been in your chosen career since you graduated. And what led you? Now, obviously, the reason why we're talking is because you're a real estate investor, obviously. But what kind of led you into the realm of real estate investing?
You know what? There was one particular, few different moments, but one was, so my dad was working for this drafting company, and then after a while, they went on the very first vacation. They came back from Cuba. I remember he stepped through the door, and then he was let go right then and there. And then they had really no savings, and no money for the future or retirement income or anything like that. So I thought, you know what, this is not the life I want. I want to make sure that me and my family, that I'm always I have a backup plan and something, a future, basically a financial future.
And that was, when did the bug officially bite you? When about?
You know what? I think it was maybe 15 years ago or so. Yep. So I started investing pretty slowly back then. But I met a friend my wife's friend from university, and he came up to me and said, "Oh, we're talking." And he said, "I have 46 tenants." And I thought, "What? 46 tenants? I want to have 46 tenants. How do I do this?"
I think that's the first.
He was a realtor.
I'm going to bookmark that. I think that's the first time I've ever heard anybody say, "I want 46 tenants." So hang on a sec here.
Absolutely.
Dropping some fire.
I want 46 tenants. So he was a realtor, and we went to look for a property.
Yeah.
And he said, "We're not going to buy. We're just going to look at this triplex in Hamilton." And I bought it. Probably the first property I saw, I bought it. I said, you know what, this can be turned. This is a kind of a fourplex, but really a triplex. I can do this, right? Yeah. So,
and when was that? When was that first property purchased?
You know what? It was probably 15 years ago. But
do you still own it?
I do. It's been problematic. And a few years before that, I bought a couple condos. So then, all of a sudden, in a matter of 2 months, I got 2 condos and a fourplex, and then boom, I was a real estate investor.
Poof! Just like that, eh? Hang on a sec. With that, we got to drop a bomb. Boom! All right. I was a real estate investor.
So for anybody out there, don't buy a triplex or an illegal fourplex as your first property. I don't recommend it. It's not fun. You lose some sleep.
Yeah.
Right. It's and then don't buy the first property you see.
Yeah. So you're saying everything you did to start, don't do that. Is that what you're saying?
Yeah, I have a level of, I think I learned a lot from it, but a level of impulsiveness that, people were telling me as a kid, you're so impulsive. You do stuff, right? And I'll tell you one quick story. I'm 6 years old. My sister's 12. We're at the swimming pool, like a deep Olympic-sized pool. And my sister was trying to get like a card for swimming, right? And use that card to rent like water equipment and then stuff like that. So they had that in Poland. And then they asked us to jump in from the deep end. I don't know what I was doing there, but my sister said, "I'm not jumping." I jumped, and then, all I see is bubbles. And then obviously I didn't know how to swim. So then this hand grabs me and then pulls me up. And then that was the lifeguard. He started yelling at my mother that I don't know how to swim. But impulsiveness plus commitment leads you to do things like that.
Well, I'll tell you, I know you said impulsiveness as a bad and make a decision. In some cases it can actually, it shapes who you are. It shapes what you do. You make decisions quickly, right? You act, you think slow, act fast, right? Might be a better way of saying that. It's like you do analyze. You're one of the most detail-orientated operators, analyzers of property that I know. But when you have the right amount of information, you jump very quickly on a good opportunity, and that's a really good combination, to be honest.
You know what? I learned to embrace that side of me, and then just add a lot of due diligence, but not have the analysis by paralysis phase me. Just basically, if something is good, it makes sense, boom, go for it. So what I wanted to say to people that are listening to this show, there's something weird, something about you that maybe the society frowns on, like a quirk or personality trait. I would say try to embrace it and see how that can fit into your career, your real estate investing, because that's could be used as a strength if used appropriately.
Yep. Yeah, 100%. Well, first of all, thank you very much. I did not know all the details of your backstory, and I would imagine a lot of that, coming as an immigrant mentality and learning a new language, and seeing Dad go and do 2 jobs or whatever it took for Dad to take care of the family. I imagine a lot of those things really shaped you in your future endeavors.
Oh, absolutely. I still don't like pizza because you used to bring it home every night.
Well, I'm glad that's the biggest lesson that you took from all of the pizza. No. Question for you, and this is an aside question for you. This is a question, and I have this conversation with my wife all the time. Sometimes when we as parents, and you have, how many kids do you have now, Mike?
You know what? I don't have kids. I'm married. I have a little dog named Lucy. Oh, so but I've been married for 19 years. So it's been a while. I'm so sorry. I thought when you were out this way and you were going on a cruise Alaska, I thought you were taking the family. I'm totally sorry. I did not realize that. Are there kids in the future for you, my friend? You know what? At this point, I think this is it. This is where we are. Nice. So, but you know what? My wife is my best friend, and I feel like I'm very privileged to have the situation I am. Yep. I'm in. And your chosen profession at this moment is a computer engineer, correct? You know what? I became a full-time investor as of January. So I do still a little bit of that, but mainly I would say if you look at my what I spend 40, 50 hours a week is investing right now. No, I agree. And that's probably done very well for you. So, okay, so you've invested into some properties that you said weren't good investment properties, but at least you got you started, which was a fantastic opportunity. Now, here's the big thing that I really wanted to talk to you about. Like, we were just, one of our last sessions, you were going and you were showing me through a lot of some of the opportunities that you're buying, and you're buying out in Ontario. And I made the comment I go, geez, Mike, it almost feels like you're one of the only ones still buying in Ontario. All the Ontario investors are either going to Florida or Alberta, or they're going somewhere else. I think there's some opportunities in Ontario, and that's really what I really wanted to talk to you about here today. So why don't we do this? I'm going to take a step back, and then we're going to talk about current Ontario opportunities that you're looking at. So you started buying some single families, some multiplexes, and quasi fourplexes, and you still own a lot of those. And then you made the pivot into apartment buildings. When did you make that pivot, and how did you make that pivot going from a single family, duplex, triplex, fourplex into a multifamily property? You know what? I made a mistake of paying off my mortgage. So I should have invested earlier, but I paid off my mortgage and then I took out all the funds. After going to a real estate conference, I realized just how much equity is sitting in my personal home. But I always felt everybody talked about investing with other people, but really, I was fortunate to have a lot of those funds in there. So I started buying like 7-unit buildings and then 8, and then these kind of properties with my own money in London, Kitchener, and then in Hamilton. I wanted to really, the idea then was, hey, let's get an amazing retirement and then financial freedom as soon as possible.
So two questions. Number one is, if you don't mind me asking, how many doors are you currently sitting on right now? And what is kind of your target property that you look at right now?
So right now, I think we have around 75-ish doors, but really, I look at more focus around what's the quality of the doors, right? And definitely that's been scaling up quickly. Been selling some assets too, but now primarily focusing on multifamily. So we have some that are mixed use, but 20 to right now targeting anywhere from 16 to, let's say, 30-unit buildings here in Kitchener, Hamilton, and London.
Kitchener, Hamilton, London. Okay, so now I'm going to go back to the central question that I've wanted to find out is, why are you the last investor standing, still investing in now? And I'm being facetious and joking. Obviously, there are other people between you and Quentin. You guys are buying up all the properties in the area or something, right? So why are you still very active and investing in and buying up in the Ontario marketplace?
You know what? Part of it is discipline. I'm not saying people that invest in other places are not disciplined, but I like to kind of stay course for a while. So even when things get tough, and then certainly finding buildings in Ontario is not easy. However, I absolutely love the economy in Ontario, how diverse it is, and then I understand it. Where I think a lot of people, maybe not everybody, but they underestimate how different it is to invest in different provinces from their own. I know we can buy properties anywhere, right? But even Alberta versus Ontario, very different economies and then different tenant laws. And I find that for me, actually, Ontario is what I know. I love the economy because it's so diverse. Maybe that's still true, but half of the immigrants that come to Canada, half of them land in Ontario. And we're at about 420,000 new immigrants a year, right? So there's a big influx and demand and then a lot of, I would say, corporate offices. So Microsoft, Google, right? Like so many companies, they settle in Ontario. So I love that. Yeah. Because these kind of tenants, they tend to pay significantly. And I find that, getting frustrated quickly and then moving and then investing somewhere else just because it's hard, that's not the answer. Right. I think there's a lot of opportunities here. It's just you have to learn and stay the course. It takes time, right? Which is great for me because I've been around here for a while, but it's a competitive advantage to understand the tenant laws and then being able to work around them, right? Competitive advantage to have the relationships to get the buildings I want to get, because now we're down to like a cookie cutter model in terms of what we're buying. Yep. And having those relationships. Now, if I went tomorrow to New Brunswick, I don't have these relationships. And I don't truly understand the market there like I do here.
Right. You could do it, but you're not willing to, you've invested 15 years into your backyard and you know it like the back of your hand, and you're just sitting there going, guys, please, all other investors, please leave, go away. And now we can finally, we have a captive audience of all the properties that you can take a look at.
Another reason is I can drive to the property and I can look at it. I do spot checks on my construction crews and property managers too, so they know I'm close, right? And that helps as well. And then you know what? I used to actually travel globally as an IT executive, and then I'm done with flying to where I need to work. So that's another reason for being local.
So the markets that you pick are primarily like, what are the big drivers in there? Is it primarily, like, I know the immigration is, everybody probably would agree that immigration into Canada is very strong. By and large, most people land in Southwestern Ontario. Southwestern Ontario, Montreal, and Vancouver are the big things. Interesting to note is Alberta has a huge migration of immigrants as well, but by and large, the majority is Ontario. So it's people coming in. What are the big economic drivers in the areas that you're investing in?
I always look at, and then I have some analysis done. I always look at what are key growth markets, right? So Toronto is it's an old and tough market to get into. So I focus more on what are the secondary cities, right? Secondary markets that, let's say, a IT executive or an accountant or someone that's coming up would want to live. And Kitchener, for example, is an amazing market because the university where I went to drives a lot of talent comes in, and then the tech companies open up offices around there. There's a Google office, the RIM. I know the RIM is not, BlackBerry is not as big anymore, but companies like that, they definitely drive talent to come in, and then these markets are flourishing. They have a lot significant growth. And yes, I understand that rent is cheaper somewhere else, but if someone's going to, like, these kind of companies, they pay significant wages. So for someone, if they have to pay extra $200-$300 for rent, and they're making $100,000, they're making $85,000, it's definitely affordable for them, if you will. Yeah.
Now, one of the things that, so in the realm of some vernacular, some of my people on my show might understand is, the three pillars of real estate: what you buy, where you buy, and who you rent to. You have a very targeted demographic of who you rent to, and you have tech professionals in university towns, and they make good money and they're a good tenant profile. So you have your tenant profile pretty dialed in, and then you match the right property in the right area to them as well. So that's very, very smart, very brilliant. Is starting with a good tenant profile of who you want to rent to, and then you find buildings. I'm going to not steal all your thunder, but then you find buildings that you would consider would be under rented. Would that be kind of your strategy?
Absolutely. So we look for buildings in average areas that are coming up, not distressed areas. And then this is specifically, and I'll tell you why in a second. And then the aim is to turn those buildings into amazing apartment building communities that people would love to live in. Key reason that we don't buy in distressed areas because we don't want that exposure for our investors. So I have investors now, and the primary goal is really preservation of capital. So don't lose money, right? And second,
rule number one, don't lose money.
Rule number two, grow their money, right? But you got to follow them in order. Yep. So by not buying distressed properties, it's more predictable how we can turn these buildings over.
Very good.
And there's so much more to it, right? No. I mean, remarketing of those buildings and such. It's not just coming in and then doing the renovation, but it all has to kind of connect the investor with the investment, with the tenant, with the projections.
Yeah. You're one of the best I know as an operator to be able to, the detail that you put, and you're like the spreadsheet king and the checklist king, and you're a fantastic operator. And okay, so do you mind if we dive into, some people are sitting there going, okay, Russ, you've talked, and Mike, you guys have talked about there's opportunities in the GTA area. You mind if we talk about your latest property that you're acquiring right now, your apartment building in Kitchener?
Absolutely.
Yeah.
Let's talk about it.
Okay. Well, why don't we just start at the beginning? Where did you find, or how did you find it? Was it through a realtor relationship? Like, how does somebody attract a property? So maybe ask a better question, Russ. What is the property in, if you don't mind asking, the area, and then we'll talk about how you how you found it.
So the property, this one is on this. This one is a 16-unit building in just north of downtown Kitchener. The reason I love this building is because it's amazing on the outside. So it has brick. The floors in the common areas. I know. For me, I get excited when I see polished concrete because this stuff lasts forever. And then, so essentially, it's a great building, solid. And then the units, they're like 1970s finishes with cabinets, right? So the job is to fix the units, but really the bones and everything else around the property is amazing. Now, getting to the location, it's 1.1 kilometer walking distance from the Google office, right? And then 1 kilometer away walking distance from the GO station. So now you can see people can walk to the office. They can go to Toronto once a week downtown, and they can walk to downtown Kitchener, which has, everything you would want in a city. Yeah.
And is your primary target in that, what I call that the sweet spot is, what I would call small, don't get me wrong when I say small, like smaller multifamily, like what is your target sweet spot for units?
You know what? I like the 20 to 30.
Okay.
And the reason is because it's a little too far of a reach for a mom and pop investor.
Yep.
And I find that when you look at 6plexes and 8plexes, they sound like a great place to start, and they are, but there are many people that get into it and then they may overpay. So it's a different level of competition.
Yep.
In that space.
Yeah, and then you're also not competing with the REITs of the world and the large institutional players, not playing with them. They would probably consider that 20 to 30 too small most of them.
Absolutely. So they wouldn't look at buying these kind of units because they have, $40 million to invest and they want to do it in one shot. They have a huge overhead and a gigantic team, right?
Yeah.
Which takes them a lot to buy a single property. We're very lean, and the idea is to build some kind of an efficiency and scale, but at the same time for the investor to be a little bit closer to the action,
yep.
right? By investing with us.
Perfect. So let's 16 is rounded up to 20. So you're right in your sweet spot of you're looking for in that area, and you've found a really good neighborhood that you like that fits with the tenant profile. What is kind of like on your criteria of what you look for in investment? And then I will get back to where did you find it? Was it just a realtor that brought it to you? Was it one that was sitting on the market? Is it a private deal? Like what's kind of a criteria? And then how did you find it?
So criteria is actually extremely specific for us. So we look for buildings that are built in the mid 1960s to the mid 1980s that are not wood frame buildings. So there's a lot of them in Ontario. They have to be purpose built. They could be mixed use, meaning that they have a couple storefronts at the bottom. If they're in a great area, that works well. But they're purpose built, right? They're not converted, and then they're 100% legal, which I learned not to do from that triplex. Remember?
Yep. So go ahead, keep going.
Sorry. So that's the criteria. It has to be in an area that's coming up. It's got to fit our tenant type, and then there's room to elevate the rents significantly. So that we can get that, so the area, right, average, that aligns to that goal of preservation of capital, and then the lifting of rents, and then remarketing, that aligns to the goal of growing investor capital.
Right.
Because buildings are valued on the net operating income, so essentially the profit
of
the building. So we're trying to drive that NOI as high as possible and as quickly as possible.
And then that goes back to your earlier comment about being an expert in an area, because now you can quickly identify if something's under rented or not.
And I can be much more competitive here than in Alberta or New Brunswick, just because I know it, right?
Right.
And then competitive with purchase, competitive with the rents, right? It all kind of comes back together.
Okay, so this property that you're buying in Kitchener, the 16 units, if you don't mind me asking, what are you paying per door? What's kind of the suite mix? Kind of cap rates, and then when we'll talk about what the opportunity is.
So this one has one. Mostly, it's 2 and 3 bedroom units. I would say majority of them are 2 bedroom, and there's one bedroom in there. We're paying roughly $200,000 per door. Although when investors are looking and talking about per door, just be conscious that you're not buying 23 bachelor units, right? Which would be per door very different from 3 bedroom and 2 bedroom units. But really, the cap rate, the coming in cap rate in Ontario is going to be pretty low. So somewhere around 3s. But really, the idea is to lift it to 6.5, 7, around there.
Right. Okay. So you're buying it today at, say, was it 300? You said 300 a door at a certain 200. 200. You're going to take it to 300, right? So you're buying at 200 a door, and what kind of rent levels are you getting for that right now?
So right now the rents are around $1,000.
Wow!
In those units,
and those
sounds like a lot for people.
What's the suite mix?
The suite mix, one bedroom. I believe there are 2 3 bedroom, and then the rest are 2 bedrooms.
Okay, good suite mix. And if your average rent is like $1,000, like what is? And then you'd also mentioned it's original stuff, 70s and 80s type of original. So are there any renovated units in there that you're aware of?
There's one vacant and renovated unit. It's a little bit unfortunate because the owner renovated it and it's got, carpets and such. And I thought, why would you put carpets? Who has carpets?
Yeah.
Right. Not many people dream about having a carpet.
Yeah.
Right? So, but anyway, it's still going to do well. And it's only one, thankfully, it's only one unit that he renovated.
Right. Okay. So, I don't mean to put you on the spot here, but so 1 bedroom rents are about what, give or take?
You know what? In that area, we're hoping for about 1,700 or so
for a 1 bedroom,
and then for 1 bedroom, right?
Yeah. And what are they currently? What's the current 1 bedroom rented for in the property?
You know what? It's probably around $800 or so. It's somewhere around there.
So you legitimately could double it.
Right. And then that's the idea with the 2 bedrooms too. We're doubling the rent.
So what did double?
They're
okay.
around $1,000,
Yeah.
and it's going to be double. It's going to be around 2,000.
And a 3 bedroom unit?
3 bedroom unit could go maybe to 2,200 or so. But you know what? In that particular area, in terms of my other buildings, I don't have any 2 3 bedroom units. So that's a little bit of an estimate, but it's plus minus $50.
Right. Yeah.
Month.
Yeah. Well, let's. I think the simple answer is you're buying it today at a 3 mid to low 3 cap rate, and you're looking to double the rents over a course of what kind of timeline are you looking at?
So roughly 3 years, and I know that's a lengthier time, but the idea is that we don't want to. Also, you got to think about the neighborhood, right? We're coming in, we're trying to make amazing apartment building communities from average ones. So don't want to cause a major disruption, and then want to do this in a manner that is, I think, conscious of the community. So then you have natural attrition. We have other buildings in just outside of the city that we can relocate tenants to with slightly nicer finishes. So there's a variety of ways, but essentially the plan is 3 years, and then to hold the building for another couple of years. Because once it's making top rent and the mortgage is being paid down, this is a wonderful asset to hold.
Yeah. Yeah. So you're picking up this asset for roughly around $3.2 million. What kind of, based upon your current numbers, what kind of financing are you getting on it? What kind of down payment is required? Like how do you close on that place? Like how much capital does somebody need, and what kind of financing are you getting?
So you need roughly $1 million to close on it with all the costs and such. But then think about your slush fund, and then also in Ontario, buildings like this would never ever even close to cash flow at the beginning. So you got to hold them at negative cash flow for a little while. However, if you're patient and then you plan for it and then have enough money up front, then definitely that you turn that trajectory and then get them to cash flow neutral and then higher. However, cash flow is not really the game. I'm saying it from the risk perspective. Got to protect yourself and then have sufficient funds to cover negative cash flow, especially in where we are right now with higher interest rates. But that's kind of having a short-term loan and then refinancing around the year 3.
Right. So you come in. Or do you take private financing, or do you take institute? Like, how are you getting? You get obviously a mortgage plus other investment capital that's coming in through your own resources, through your investor resources, things like that. I'm just trying to paint the picture on how somebody closes on this, and then we're going to talk about the repositioning strategy.
So then I use tier 3 lenders, if you will. So these are, tier 1 would be the big banks, and tier 2 would be like some of the credit unions. And then tier 3 would be the folks that are willing to look at your business plan and track record. So these would be, like funds and such. So they look at your track record, look at the business deal, see if it makes sense, and then they lend to you, right? Because the debt service coverage ratio would never work when buying an asset in Ontario.
Yep.
So understanding how you can get to a point where you can refinance with at least a tier 2 lender in 2 to 3 years is really important as part of the plan.
Yep.
So having kind of that clear exit strategy from that higher cost mortgage.
Got it.
So this is a tier 3 lender. Typically, they do interest only type of loan to help with some of the cash flow. They'll also finance a portion of the renovation costs on an as needed basis, meaning that as you complete, they fund. Right?
Got it. Okay, so you're putting up roughly ballpark $1 million to buy $3.2 million. There's some financing that's being put in place. What kind of a renovate now in that $1 million capital? What kind of here's the better question is, what kind of a renovation package are you putting in per door that's on your best estimate?
So you need a little bit more than I'm saying there's money to close, and then there's money to do renovations, and then also some of the holding costs. So you end up closer to 1.5 million when it's all over. But depending on the building, but for this particular one, I would say 50,000 per door. I know that's on the higher side, but that's what we do to attract the tenant we want and then get the rents we want. You could renovate it for 25,000 easily.
Right.
But you're looking at a different market, different asset.
Yeah, you're looking to double your rent. You're not looking to just have a little marginal, and you're looking to have the term you used was a high-end rental community.
Mm-hmm.
Okay. So you're looking to put in about $50,000 per door into each property, 200. So you're into it for like $250. But now your goal is to essentially double your rents over 3 years. Is that the correct strategy?
Absolutely. That's the strategy.
Okay. So let's talk about the process of do you kind of have like do you do cash for keys? Like, how do you incentivize tenants to move, or do you just wait for natural attrition, or how do you kind of go about which units to renovate, which units to change around? Like, what's kind of your process for that?
So unfortunately, in Ontario, there is no one way of doing this because the tenant laws and because of the tenant profiles, you almost have to approach it on a group by group basis. But really, the wonderful thing about apartment buildings, there is partially natural attrition, as you mentioned. So people move because of a job, they have kids, they get divorced, they get married, whatever that family situation happens to be. So that's part of it. Another part of it, we can help people find a slightly better place because some of these apartments, they're not great looking because the owners have not been keeping up. They might have, I don't know, if there was a leak in the ceiling, the owner might patch it up with some tape and then just leave it like that. So we can offer people nicer, slightly nicer looking units just outside of the city.
Well,
so that's another way. And then cash.
Yeah. Do you ever have any? Oh, sorry. Go ahead, please.
And then cash for keys is obviously an option. However, it's not the only option because I think that sometimes property managers and investors in Ontario, they take that easier way. That's an easier way out, I would say, but it's very costly. Yeah. So people here pay ridiculous amounts of money for apartments.
Yeah, it's quicker in many respects, but at the same time, it's at what cost? Really, what it comes down to. Now, do any of your tenants ever want to move within the same building, maybe to a nicer unit, or does that doubling of the rent kind of be a prohibitor for them?
So that usually doesn't happen because in Ontario, if you offer them a different unit while you're renovating, they'll have to rent at exactly same rent that they had. So that model doesn't necessarily work.
Oh, my God. Sorry, I didn't mean to be ignorant about Ontario, but some days I just shake my head about the Ontario laws.
But
I know there's a but.
Look at it this way. There is no point. What's amazing about Ontario, and this happens in other provinces, right? If the market dips, rents go down, and then tenants move out, and you have let's say 30% vacancy. That never happens here.
No,
never happens here. I mean, the vacancy in Kitchener is less than 2%.
Yeah. So and by and large, go ahead, please.
So the odds of you having 20% vacancy that's unintentional is not going to happen.
Yeah.
So all these factors kind of come into play. Yes, it's more difficult to turn over tenants, but if you set a rent of $2,000, it's very rare that you have to actually drop that rent in 6 months or 7 months. So really, people get reassured by, yes, you do a lot of that work up front, but then that asset is basically performing.
Yeah.
Right?
Well, and I 100% will also echo something that you said but didn't say is the rents in Ontario are by and large significantly higher than a lot of markets across the country. Like, for example, you're getting $2,000 for a 2-bedroom, like a really nice renovated 2-bedroom apartment unit. Like, don't get me wrong, it's not chopped liver. It's really nice. Man, I just rented a 3-bedroom, 2.5-bath brand new house just outside of Edmonton, and I think we got $2,200 for it. For a house, like the whole house. All right, so the rents in Alberta have a long way to catch up, but that's also one of the reasons why I like it is because I think there's room for it to grow. But in Ontario, you've already got that built in. You don't get drops in rent. You also don't get large increases on a year-to-year basis, but you also don't get the opportunity you just talked about is you have an opportunity of taking a building and doubling its NOI in effect in a period of 3 years.
And essentially, there's a lot of, I would say, risk reduction in the fact that we're doing 2-3 units at the same time.
Right.
We're not doing the entire building and then taking a massive risk, right? We'll rent one unit and test out the strategy, which worked a few blocks over or a couple neighborhoods over in that same city. And then it works, and then you just start replicating over. So it's that's another reason I really love multifamily, like existing multifamily. You're not taking these crazy risks where you're buying a piece of land and then putting up a building and hoping that people will buy it and it will all work.
Got it. Okay, so I'm clear on the process. You've bought the property, you've put in some money down, you have a tier 3 lender to kind of do some interest only, almost like private financing, probably just above a private loan in essence, right? Okay, then now you're kind of waiting on tenants to move out naturally. You're then when somebody moves out, you go in with your $50,000 renovation package, and then you re-rent it for double the money. So we're clear to that part of the process. So let's say 3 years from now, after you're all said and done, and now it could be 2.5 years, or it could be 3.5 years. You don't know, right? It's the tenant moving on is kind of the one. If they move quicker, you can do it quicker. If they move slower, it takes a little longer, right? Okay, so in 3 years, you're now going to go back and refinance with new financials. What does that process look like at that refinance stage? Are you able to get all your money back plus? Are you able to then have it as a cash flow asset? Like, what is the end goal in 3 years?
So the end goal in 3 years is really put it into conventional mortgage and for it to start cash flowing. Yes, we pull out some money, but remember, we borrowed also funds for the renovations. So that building, in terms of the loan to value, it's up there. So we're looking to have a stable cash flowing asset that's paying down the mortgage. And then also we get the benefit of low operating costs. Because remember, you got new faucets, new fridges, all this stuff that typically breaks. It's all brand new. So goal is to pull out as much money as possible, return as much funds to the investor while they still own a great piece of property, and then the cash flow starts.
Yeah. Now, is based upon preliminary projections of the things that you've talked about, is it possible to get out all investment capital within that 3-year time frame?
That would be slightly tough because of the debt service coverage, but pulling it out of it, it's going to be a long shot, I think, pulling out all of it, but at least some. Yeah,
a good portion. Like, and I know you can't tell exactly how much, but let's put it this way. You're going to do everything because you're putting your own money into this too, are you not?
Oh, absolutely.
Yeah, significantly of your own capital, but your goal is to try to get back as much as possible in that refinance time in 3 years.
Because we want really, you want to incentivize investors to continue investing, right? And then the sooner they get a lot of their money back, the better.
Yep,
right?
I understood. So then in 3 years, that investor gets a check back. They still might have a little bit in, and then your goal is to just operate it, manage it for another 5 years after that, or how long?
Another 2 years to the 5-year mark.
Okay, and then
I
what
like
do you do
to
then?
hold on to stuff for a long time.
Yeah,
right. But I find that people like a shorter time period than I do, right? Like I would hold this thing for 10 years if I could, but people they like 3 years, they like 5 years, right? So that's the reason it's kind of built around this 5-year mark.
Yeah. Okay. So buy it, reposition it over 3 years, manage it, hold it for 2. You're at a 5-year time frame. Then what's the plan at that time? Do you then condominiumize it and sell it as individual units, or do you just potentially refinance it again? Do you bring a new investment pool in to buy, or do you sell? Like what's the goal in 5 years?
So in this particular property, the goal is to actually sell it in year 5. And then cash out. So then the investors either move on to a different project, or they buy Ferraris.
Yeah, yeah. So in essence, you're dating the capital. You're not marrying the capital. Is a term I heard a while ago that I liked and resonated with. You're dating for 5 years as opposed to marrying forever.
Absolutely, because things change, investors' time frame change, and then the key is really, if they get their capital back, it's not like they're letting go of something. They can reinvest again in another property. But look where we're increasing the net operating income the most, right?
Yep.
During the first really 3 years, those are the harder years to execute the plan. So if we would hold the property for a little bit longer and just coast it, we would drop that return rate slightly.
Right.
So that's the reason also for getting rid of it at year 5.
Or maybe at that time, what you do is you bundle 3 or 4 of these things up together, and then you approach a REIT and just say, "Here's a package for you guys."
That's very possible. Why not?
Well, why not? Eh? Let's bookmark this conversation 5 years from now, and we'll figure out the exit from there. So, if all goes according to plan, what kind of returns are you able to get from these kind of a project, Mike?
So we're looking at around, for investors, somewhere around 16% annualized return. And they could be higher. Let's say if we took more risk, we could get probably higher returns. If we went more into the tougher areas of Kitchener, into distressed properties that have variance. But I find that, rule number 1, don't lose money and then preserve capital. And then that's the reason we're at, let's say, 16%, which is, I believe, is a healthy return.
Yeah. And just as an FYI, everybody, the disclaimer here with all the really fast talking small print, say results may vary, do your own diligence, seek your own professional advice. This is not an offering. This is just talking about pro formas, and past results don't equal future results, stuff like that, right? So.
And this is for educational purposes only.
100%. Woo! My lawyer just had to breathe the sigh of relief here for us, Mike. No, that's one of the reasons why I wanted to have you on here is you're one of the most methodical investors I know, and you have a process and you have a system. And when most people, like I said, most people are shying away from Ontario, here's Mike still standing there. As a matter of fact, you're seeing more opportunities come your way, are they not?
You know what? As I think people notice when you're buying assets, and then when you're turning them over, and then when you're executing the plan, and then that's not just let's say realtors and private owners that own apartment building, but also lenders look at that. Look at track record. I underestimated how important that is, and with track record, with time. I know everybody wants to buy 1,000 units in a year, and then there are such podcasts, but this is not one of them. This is more the slower and more steady kind of road.
Yeah.
But I definitely see more and more opportunities, especially now. I must say, last year I was pretty frustrated with the lack of good opportunities, because every seller, thought they were sitting on a gold mine, right? And expecting the world for their building. But this year, I think we have at least a 12-month window where things got shaken up by the interest rates and then by the changing conditions in the market. And I also like the fact that the media is screaming about recession, music to my ears, right? Because that's when good opportunities come about. Like, one of the best investments I made was buying a building on March 2020, during, like, at the beginning when the lockdowns just started, and every lender was saying, we're not lending, sorry.
No.
Like,
I 100% agree. And I asked the question that to a group of people is, knowing what you know now, how many of you would have bought a property in, say, March, April 2020 during the height of fear, and you could have picked up a property for significantly cheaper? Hindsight's always 2020, always. But sometimes during change and fear is when you can actually get a really good opportunity, right?
Right. And exactly. And I think us investors not listening to every noise that the media makes, and then not 100% buying into the hype, and then looking at the fundamentals, right? Like, on one hand, you hear recession, but on the other hand, the unemployment is extremely low in Ontario, and employers are screaming because they can't find people for work.
Yep.
right? Which seems a little bit opposite of recession. And then you have this really, really low vacancy rate in cities. So there's a tremendous amount of demand for rental housing.
Yep.
So these things are, you just got to kind of connect the dots a little bit and then really see where the market is. And then we're not flipping over a weekend and filming a TV show here, right? We're doing a project over 5 years.
Yep.
Like, how confident are you within the 5 years? We don't even have to drag this for 5 years. We could stop this and sell the building in 3 years, right? So there's a lot of kind of flexibility and things will happen. Well, look at the market 5 years ago, right?
And then at the same time, as if things go topsy-turvy and recession kicks in and people lose jobs, what do people do when they lose jobs? They go back to school, right? And they retool and go back to school. And does anybody know a good area for university towns? Maybe. Hey, Mike? Well, that's actually a perfect pivot for the conversation to have here is something near and dear to both our hearts, and that's the mindset, right? The mindset to be able to take the chance, take the risk mitigate, but get into an investable opportunity. And I know we could talk tactics till the cows came home, and I know a lot of people think that tactics are more important than mindset. You have a different take on that, would you not? What do you feel? Do you think tactics are more important than mindset, or would mindset more important than tactics?
For me, it was, I would say 80% mindset and then 20% tactics. Like when I bought that triplex, it was more of, how do I get through this? And it was more stressful than anything. But it wasn't the tactics. I mean, choose the wrong tactics and then lose a few $1,000s here, a few $1,000 there. But the mindset is really what that kind of pushed me along. Or buying that building I just told you about in March 2020. Like that's not easy at the beginning of COVID when we didn't even know what it is, right? In March. So I would say, and then also staying in Ontario, right? And then not looking, how do I build, storage units in Southern US? Like, how do I maximize my portfolio, lower my risk, right? And then just stay with it when you don't want to.
Yep.
Like I wanted multiple times to jump outside of the province and then outside of the country as well. But I would just say, hey, come back, right? And then that's where I think one of the, key things, like your real estate, Raising Capital Academy has been amazing, that community. And then your coaching has been pretty amazing in terms of kind of keeping me on the right path. I have other as well as help and such. So all of that together helps to be a high performer and then be the real estate investor you want.
Yep,
right?
That's what I find. Most high performers have a team around them. They don't ever just have just one person. They have an absolute team around them that are specialists and the best at what they do. And I'd consider you one of a very, very high performer in the realm of real estate investing.
Oh, thanks, Russell. Yeah. And then, wake up in the morning, I was feeling a little bit off, and I put the audio book, Be Obsessed or Be Average, right? Put that on for 10 minutes while riding to the gym, and then get your mindset in place. Work out, and then boom, you're ready for the day. So those little things, right?
Well, that's what I was just going to ask you. Do you have any specific things that you do that, and I think the operative word is that you have to do it. It's not think about it or whatever. You actually have to do it. So what are some of the things you do to help you get yourself in the right mindset to be a high performing real estate investor?
So many, I would say. First thing is working out every morning on weekdays. That's extremely important. I do meditate also, just to get more grounded and stable. I have you, Russell, right? We meet on a periodic basis and we talk through kind of strategies and such. I have another mentor as well, and for me, it's even little things. When I say, you know what, to you, for example, I want to buy this many units. And a friend, let's say high school friend, would say, "Oh my God, are you crazy? Why would you do it?" And then a guy like you doesn't even blink. And that just kind of meeting and understanding the body language, it's like, oh, okay, so this isn't a crazy idea, right? So those key things, and then listening to podcasts and then some of these audiobooks, continuously feeding the mind, because it strays off sometimes, right?
Yep. Yeah, I 100% echo everything you said. It's not. Here's the thing. When it comes to mindset, everybody's sitting there and go, "Give me the secret. Give me the one thing." It's not one thing. It's everything. It's the body of work. It's the little things. It's the doing 5 things a day that you've said you're going to do that'll move the needle forward. It's reading the right books, hanging out with the right people, going to the right conferences, having the right team. It's just doing it all together, right? It's the body of work. It's not just any one thing. Now, I'm going to ask you one final question here before we sign off here. And I envision that this could be another conversation. Guys, if you're listening to this, by all means, we've been dropping, lots of fire here today. Mike's just bringing the heat always. And I've been remiss here, Mike. You've been bringing some bombs here too, brother. So
love the facts.
Yeah. So you're one of the best operators, and you're one of the most detail-orientated people that I know when it comes down to putting a project together and managing a project. And there's lots of people that can talk a big game, and there's lots of people that can flash and dash, and they're really slick in what they do. You're just you're relentless on the execution side of things. That's some people. That's a skill set that not everybody has. Is the managerial, the project management, and the execution. And you're one of the best I know. I just wanted to offer that to you.
Oh, thanks, Russell. You're too kind.
Yeah, no, it's 100% true. I wish I had as good as. That's one of the things why I recognize it, because that's actually a weakness for me. Is I'm not the greatest. I'm great ideas. I'm a starter. I get things fired up, and I get things really cranked up. It's just taking it right through to the almost to the point of boring minutia detail at the very end. That's hard to do for me. But some people, they just love that. Some people just sit there and go, the more the monotonous, the better. Just bring it on. So, and here's the final question for you, my friend. If somebody was sitting here and they're maybe feeling a little bit stuck, and they're just not sure what to do. They don't know, what's the next step for them. Maybe, it's maybe buying their first place. Maybe it's moving from single family to multifamily. What advice would you give if we were having coffee right now and somebody told you that they're feeling stuck and they just need a little help to move forward? What advice would you give them?
You know what? Earlier in my investing, I made a mistake. I thought that searching for stuff on the internet for free would be the best idea, right? And then I could kind of outsmart the system. And that was definitely not outsmarting the system. So for me, going to a conference, getting a coach, right? Looking at deals. I mean, you can even look at, for example, the deal I'm doing here as well. And then I can add a link to the, but analyzing it, just getting some kind of inspiration. And if I'm totally stuck, what I do is I just start reading or learning something about real estate or even business. And then remembering that you don't have to always think 17 steps ahead. What's the one step I can take right now, even if it's as simple as like just reading a book or reading a chapter, doing something towards, or making one phone call. Even if you're going to get a voicemail, who cares? Just leave it. Say, hey, I'm looking for properties, right?
Yep. Awesome. Now, so you would be willing to offer the presentation or the deal that you analyzed? I know you have it in a PowerPoint deck. Would you be willing to offer that as a download for anybody listening to this, just to take a look at, to see what it looks like and what how a sophisticated investor analyzes a deal? Would you be willing to share that with people?
Absolutely. Go to mike-opportunity.gr8.com.
Is that on your website or?
It's not on my website, but I can give you the link. And then also on my website, you go up and then you can click on case studies.
Yeah.
So we have some case studies around some of the buildings, which we have done. And in videos, we have walkthroughs of the units. So that can help you to learn basically how we do deals, and then why can't you do the same, right?
Yeah. Just as an FYI, Mike, you got a fantastic website, by the way. And for everybody who's kind of watching this, is where would be the best place? I know I've popped up many times as your website and stuff like that. Where would be the best place to reach you and get a hold of you?
So on my website, mikebeer.ca, just reach out, and then or you can find me on Facebook as well.
Yep, cool. And then if you want to look at the existing deal, it was mike-opportunity.gr8.com. Holy moly, we need to fix that a little bit. Why don't you just send it to me, and I'll put it as a link in the show notes. Or we can just make it a real link. But it was almost sound like a government mike.beer.gov.on.lt.
And then, there you go. I got some advice on the show as well. Kill the link, go to like a bit.ly or something shorter. Make it simple, right? But I'm joking. As one more time, just share it in case somebody wants to. How would somebody be able to download that? We'll do.
Yeah, and we'll put it in the show notes. We'll put it in the video description and all that. And if somebody wants to download it, by all means, just click it on, check it out.
Yeah, and then I'm always helpful. Yeah. So anybody wants to chat about a strategy for investing, absolutely. You're going to get me, no nonsense kind of discussion. Just what you see is what you get, right?
Nice. Love it. Okay, well, why don't we leave it there, Mike? Thank you very much for your time. And I envision that we're going to get lots of feedback and lots of people wanting to hear more about this. And maybe we'll do another case study, or maybe you and I'll put a webinar on or something and help educate people on how to get involved in opportunities like this as an investor, or get involved in an opportunity, or get involved in your own opportunity and do it yourself in your own marketplace as well. So thank you very much, my friend.
Thank you so much, Russell. You made this so easy.
Well, I try. Have a great day, my friend. Well, I sure hope you enjoyed that video. 2 simple things to do from here. If you're interested in continuing your journey, interested in continuing to become a successful real estate investor, just below where you're watching this, there will be an opportunity for you to subscribe. And if you're interested in continuing your journey, there is a hand-selected video over here for you. It's been hand-selected for you to keep your journey going forward. Thank you very much.